Welcome to the Legal CFO.
Hey everybody, welcome to the show where clarity meets profitability. This is the Legal CFO, and that's Ryan Kimler. I'm Mike Leon. Ryan's the founder of Net Profit CFO. Ryan, how you doing, buddy?
I'm doing well. Thank you for having me.
Well, thanks for being here, and you're going to break down a lot of this for us because let me tell everybody out there, if you're a law firm owner right now that's looking to get a handle on your finances, you want to grow your bottom line, and you want to finally take control of your numbers, well, guess what? You've come to the right place. Ryan's going to help us out because in each episode, he breaks down the business side of law with some straightforward strategies to help your firm run smarter, earn more. You can scale with confidence. So in today's episode, Ryan, we're going to be talking about budget for growth. So basically planning for people, tools, and time. So let me ask you 30,000 foot overview here. What's the biggest mindset shift that law firm owners need when they're creating a growth budget?
Yeah, I think, you are starting to look forward, right? When you're creating a budget, it's intended to help you plan for the future, right? We are not talking about a budget where, you put in some expense numbers and then on a monthly basis, you're looking backwards to see, oh, did I spend more than that number? By that point, it's too late, right? If you budgeted $10,000 for marketing a month and you spent 12 last month, it's too late. That money's already gone, right? So this is really the biggest shift is you've got to look forward and understand that it's a plan for, what you want to spend and how far you want to go and where you want to grow. But it might not always go according to plan. And we're not going to get the numbers exact. I think that's a good shift and a good mindset to have is that we're kind of setting a target for where we want to be. We might hit it. We might fall a little short. We might do better than it. It's okay to not hit that exact number. Most likely you're not going to.
That's right. You got to be prepared. This is a perfect segue that you kind of funneled into this because the mindset is the first part. Second part is hiring, right? So how can a firm budget responsibly for new hires without overextending?
So I think, before we look at new hires, let's really look at what our offerings are, right? What are our prices going to be? If you're going to make that next hire, and let's say you're going to bring in an associate attorney, I'm just using that as an example, what would you build them out at, right? And how much revenue could that bring to the firm? Obviously, you've got to bring the cases in, most likely. That associate's probably not bringing them. But how is it going to impact our revenue number? And then we can start looking at, well, what can we really afford to pay for that position so that we're competitive and that we can get a talented professional in the door. And so, budgeting for the payroll piece, I think you've got to kind of backtrack a little bit and look at, what is our pricing model? What can that attorney help bring to the firm and what's our return on that person going to be?
It's the toughest thing in businesses, right? When you're trying to hire, you don't want to overextend yourself and spend too much, but you want to get talented individuals into the pipeline. So let me ask you, because it funnels in perfectly, what is the difference between budgeting to maintain the business versus budgeting to scale it?
Yeah, so budgeting to maintain, you should definitely have a higher profit margin, right? You're really striving for efficiency here. Minimum profit margin when you're budgeting to maintain should be 20 to 25% net profits. And that includes you as the owner being on salary at a reasonable, decent salary, living wage, right? Or, better than, right? Probably six figures. Okay. So when you're trying to be efficient, your net profits that you're targeting, that you're budgeting for should be a high percentage of your revenue. Like I said, minimum 20 to 25%. When you shift over to being prepared to grow, it takes money to grow. That's a simple fact, simple statement. And so be prepared for and really look at where are your profits going to drop to when you start making investments back into the business and start really working to grow the business. Because again, it's just going to take money to grow. Anytime you bring in that next hire, they're not going to be up to speed immediately. There's going to be an onboarding, time frame that they've got to get ramped up and get up to speed. And so that costs money. And so, your net profits, if you are running at a 20 to 25% profit margin and you've really got a business that's efficient, maybe it does drop down to 15, down to 10, down to 8, right? To invest that money to turn around and grow. But we definitely want to monitor that and make sure that, nobody wants to have losses in their business. So we just want to monitor that. And if we're going to be growing, understand that our profit margin is going to drop.
That costs money. That's one takeaway I had from you right there. And let's see if maybe we can save them some money here, Ryan, because I want to ask you, how do you specifically help clients decide when to invest in talent, or maybe there's something in tech that can help augment or replace that talent?
Yeah, for sure. Always want to look at tech, and places that we can be more efficient. Anywhere we can be more efficient, that's always going to help you win the game of business. Um, and then there are some things that tech just can't do, right? And probably won't be able to do for the foreseeable future, even though we have some exciting things with AI coming out. We've got to know, hey, these tasks are not going to be done by tech, and no doubt we're going to need the people, right? So, but I always want to look at tech. Always want to make things as efficient as possible. It's going to help. It's an investment to make, but it is going to help your bottom line, especially from an hours perspective on some of these technology tools.
AI can't replace us yet, Ryan. That's right. Well, I'm not going to
That's
allow
right.
it just yet. So Ryan, let me ask you, because it funnels in. You're funneling perfectly into these follow-ups. What's one expense right now for somebody that's watching that most firms maybe underestimate during these growth phases?
Yeah, for sure. I think right now, especially if you're looking to grow, it's in your hiring. Is probably one of the biggest ones. I mean, legal right now has one of the lowest unemployment, numbers or rates in the market. Last I heard, it's less than 0.5% of legal professionals are unemployed. So very low unemployment. We are going to have to pay our people. That's a big part of it. And so that's a part that sometimes gets underestimated. Also, the benefits and taxes, and what's your all-in cost to really have that employee, sometimes gets underestimated as well, right? It's not just the salary figure. It's not just the salary plus the bonus. There's other things that go into it, healthcare, all that kind of stuff. So that can easily get underestimated. And then sometimes your marketing costs as well, right? On when you're really trying to grow your firm from, one revenue level to the next, how much you're going to have to spend in marketing to really take it to that next level, sometimes gets underestimated as well.
For these firms, as you were talking there, I thought of this. For these firms that are trying to expand right now, how does like forecasting help them prevent cash flow crunches as they're trying to expand?
For sure. So again, having the mindset of we want to look forward and see where we're going, right? And if we can forecast forward and say, okay, let's look at what is our revenue trend, right? What percentage are we growing revenue by, right? And then we know what our expenses are going to be and when we're going to make changes to the expenses, like when we're going to bring in that next hire. And so we can forecast forward, well, based on our revenue growth, here's what our profits are going to be. And then we can work that down to here's what our cash flow should be. And then each month we can really check our forecast and see, well, how accurate was it, right? Did we add that much money to the bank, or was there money taken out of the bank, right? Did our bank balance drop? And so being able to forecast forward and really look at the trends that we're on, where we're headed, really helps prevent any cash flow crunches in business. The further out that you can forecast and see that you might run into a period where you're going to run low on cash, the more time that you have to pivot and make changes. And that buys you time, right? And then you can make pivots, make changes, and maybe even prevent that crunch that you were going to have where your bank balance was really going to drop. Maybe you can make adjustments and it doesn't happen at all.
You know, for firms that maybe have put together this growth plan, we were just talking about, they're trying to grow, they're trying to expand, they've put together this growth plan. How would you recommend to them, or what are some smart ways that they can test out this growth plan before actually fully committing to it?
Yeah, so I would say first and foremost, really make sure that you can hit your revenue target. I think that's one of the big things is the revenue and sales target. Obviously, revenue and sales can kind of be a vanity metric, right? And we all want to say, oh, I've got a 7-figure business, right? Or what, or an 8-figure business or whatever. But really testing out and making sure that you can hit your growth numbers. Sometimes you can get too aggressive, and you set out to have strong double-digit growth, right? And it's like, I want to grow revenue by 45% or something like that. And really testing that out, just even on a monthly run rate basis, and kind of backing into, can I, with the people that I have right now, even project or even get close to that kind of a revenue number? And do you have the demand, and can you handle the sales volume, right? So just testing and seeing, where is my next bottleneck and where are things going to break? Is it even possible for me to get to that level and sustain that level before we run down the road of having that be our forecast for the entire next year?
You just fed perfectly into it, because we're talking about growing 7 figures, 8 figures. So what is something for somebody watching this right now? What's a key financial indicator that you would say, hey, look, this is going to trigger a budget update? What's something that they should be looking for in that regard?
Yeah, I would say, really any time that you're off on what your target is, right? Majorly, or material, what I would call materially. So, for example, let's just say that I'm just going to use marketing budgets, because I think that can be some round, easy numbers we can work with here. Let's just say your marketing budget for the year for your firm is $50,000, an easy round number. If you're going to spend $55,000, I would not call that material. It's probably not a major difference, especially if you're a million, $2 million, $3 million law firm, $5 million law firm plus, right? The bigger that you are, the more that it takes to be material, right?
Right.
Now, if we targeted, say, 50,000, and you're going to hit 90,000, right, and almost double what you had planned to spend in marketing, then I would say that would be a material change. It's really, really far off from where we targeted to be, and it's probably time to go back and revisit the numbers, right? Because that change from 50,000 to 90,000 is an additional 40 grand, and that could make a big difference in your profitability. So anytime that you have things that maybe change in the business, maybe you need to pivot, or you see that your forecast is, oh shoot, I'm going to be way off of where I targeted. It's time to go back and revisit, readjust those budget numbers, and see where we're at, and make changes if we need to.
Well, sticking on the budget, what is your go-to framework for creating a simple, effective annual budget?
First, I think we can get the profit and loss down to about 4 or 5 numbers. So first one is just, total sales or total revenue that we're going to bring in the door. Obviously, what feeds into that is, number of cases and the price of those cases, or the value of those cases. But once we get that total revenue number, then we can get down to direct costs. Direct costs could be filing fees, could be outside lawyers that come in as contractors, but figuring out what that number is going to be. And then our expenses, really 3 buckets: payroll, marketing, overhead. Group things in that way and come up with, target numbers for each one of those buckets. And that's going to get you down to net profits. Then, there's quite a few things down below the line that we would need to look at for kind of cash flow forecasting, if you will. But I can narrow that down to just a handful as well. So first one would be your receivables. So if you're collecting at 90% right now, let's say you bill $1 million, that means you've collected $900K. You still have $100,000 of receivables that you got to call your customer and collect, right?
Right.
So tracking or setting a target for what your receivables are going to be for the year. Any changes in assets. So for most law firm owners, the only place that this would really come into play would be if you're buying a vehicle, or something like that you're going to put in the business, or maybe you're buying a new office space and you need furniture to update, kind of that office space. That would be an asset that you're going to go out and buy. If you're going to do those kind of things, set a target for assets. After that, third number would be debt. So if you're going to, again, maybe you borrow money to go buy the car that you're going to put on the books, Set a number for your debt. What are we going to take in on the loan, and what is our debt service number? So if you take in a $30,000 loan over 5 years, obviously you got to pay back $6,000 a year in principal plus interest, right? So your debt number is really number 3. And then lastly, what are your distributions going to be? So this is outside of payroll for you. What are your distributions going to be? So how much cash are you taking out of the business outside of payroll? Hopefully you're not putting money into the business. Hopefully it is just a pure distribution, additional compensation for you. And if you set budgets for those 4 numbers on the cash flow side, that's going to get you really, really in the ballpark, really, really close to what your net cash change should be. So in other words, how much did our bank account change from January 1 to December 31st? And so those 4 cash flow numbers after your net profits will really get you close.
Great stuff and insight as always. Can't thank you enough, Ryan.
Absolutely. Happy to do it.
Yeah. And thank you all out there for watching and listening to the Legal CFO. That's Ryan Kimler. If you're ready to get financial clarity for your law firm, do me a favor right now. Visit netprofitcfo.com. Don't forget to like, follow, leave us a review. The more you know, the more you grow. I'm Mike Leon.
Thanks for watching. Be sure to hit that like and subscribe button and leave us a review in the comments.